Yo, what's up guys? My name is Devil Mode. Welcome to my YouTube channel. I'm so glad you came to stop by today because I want to talk about something that everyone should be doing, which is investing. Now, I've gotten this question a lot from my friends, which is, where do I even start with investing? And they generally don't have a lot of background in investing, so that's where the inspiration for this video came. The goal of this video is to give some basic information on investing and help those people with little to no knowledge of investing to get started. And I'm specifically talking about investing in the stock market. You can invest in other things such as real estate, but for now we're going to stick to the stock market. All right, before I go into where to start investing, I want to give a couple reasons why you should invest in the first place. And the biggest reason why you'd want to invest is you can use your money to make more money. To understand this, I'll give you a quick example. Let's say you bought a stock at $100, and then a year later you sold that stock at $200. Well, you just made $100 minus whatever taxes the government wants. And you literally did nothing except buy the stock initially for $100. Now you can take this and you can expand it to other things, such as a retirement fund or an emergency fund. With the retirement fund, you're going to need a lot of money to retire, especially if you've got that real bougie-like standard of living, buying that yacht, that Bugatti, whatever. So a good way to build that money is to use stocks and invest in the stock market. In the same manner, your emergency fund generally just sits there and does nothing, so why not let that money grow? And when the time comes for an emergency, you can just sell that stock and use that money for the emergency. And finally, what else is your money doing anyway? Just put it in the stock market. Why not? There's a safe way to do it. And that's what I'm going to go into in this video as well. So, where do you start investing? I think the best place to start is with a tax-advantaged retirement account, like a 401k or an individual retirement arrangement or IRA. Why do you want to start here? Well, it's kind of in the name. It's tax-advantaged. So in some form, you're getting some type of tax break when you invest into these accounts. So here are the main differences between the 401k and the IRA. With the 401k, it's established by your employer. You cannot open that account yourself unless you're self-employed. And the yearly contribution limit is $19,500 as of the year 2020. With an IRA, you can open this yourself, and the yearly contribution limit is $6,000. There are some other differences, but these are the ones that I think are the biggest and the only ones that, as a new investor, you really need to care about. Something else to keep in mind is that there are actually two different kinds of retirement accounts, and they're called traditional and Roth. The main difference is how you get taxed on the money that you contribute or take out of these accounts. So with the traditional, you're contributing pre-tax money, which essentially means that your taxable income for that year is reduced. However, the money you're going to take out of that account is taxed at your income rate. Now with the Roth, your contributions are made post-tax, which means you've already been taxed on the money that you're putting into the account. However, and this is the big thing, your gains or the money that you've made is tax-free. You do not get taxed when you take your money out of this account, which is pretty nice. Now, one thing I do want to note is with a Roth IRA specifically, you can actually withdraw your contributions penalty-free, and this is pretty big. This allows you to use that Roth IRA account basically as a savings account. So I made this cute little flowchart here. It's very simple, but I think anyone can follow it. So how do you choose between the 401k and the IRA? Well, here's how you go through it. Does your employer give you a 401k? If they do they give you an employer match? Now, an employer match is basically an incentive that your employer will give you to contribute to your 401k. An example is they will contribute 50% of what you contribute up to a certain percentage, usually like 4 or 5%. So you could get free money. Essentially, it's free money. So if they give you an employer match, then definitely do the 401k. Now, it's your choice to do a traditional or a Roth in the 401k. That's kind of up to you. But let's go down the other paths. So if your employer does not give you a 401k, then definitely go with the Roth IRA. And if they do give you a 401k, but they don't give you an employer match, I still think you should go with the Roth IRA. The main reason why is because the money you put in that account is already taxed, and any money you make will not be taxed. Additionally, with the point I mentioned in the previous chart, the Roth IRA allows you to withdraw contributions penalty-free, so you can really use it like a savings account or an emergency fund, a lot easier than you can with other things, because you have to sell that investment and then wait for that money. It's a little bit easier to work it in the Roth IRA. Now, if you are going with the employer 401k, generally you really don't have a choice of which company that 401k account is going to be opened with. Your employer has chosen that for you. But if you're going with the IRA, you have a multitude of options. You've got Vanguard, Fidelity, I think M1 Finance. So you can choose any of one of these, and generally they're all going to have very similar offerings. So I actually want to go back real quick and talk about the traditional versus the Roth retirement accounts, because you're going to have to pick one when you open these accounts. It's a little tough to choose between the two, but something that might help you is figuring out or trying to predict what your income is going to be when you retire. And I know that's kind of hard, but here's kind of the logic that I'm looking at. So if your income is going to be higher when you retire than it is now, then you probably want to go with the Roth because you're going to get taxed less. Now, if your income is going to be lower when you retire, then it's probably a better bet to do the traditional, because the money that you're taking out is going to be taxed a lot less than you would have before retirement. Does that make sense? I just wanted to hit that point real quick before I moved on, because I don't think I talked about that. So now you've decided to invest and you know which account you're opening up, etc. So where do you put your money? As a new investor, I really think you should stay away from buying individual stocks. This is, especially if you don't know what you're doing, it could be a real high risk. You can lose a lot of money if you don't know what you're doing. Buying into individual stocks requires a lot of research into companies, the current market, and technologies. And it requires a lot more active management than what I'm about to suggest, which is index funds. Index funds are a really good balance between investment returns and safety, because what happens is the money that you invest into an index fund is spread out across a wide variety of stocks. So your portfolio doesn't get hurt when one company goes bankrupt or one stock goes down, because you've got a multitude of different stocks that are going to offset that, right? In addition, index funds generally have low expense ratios or fees, so you're not paying a lot of money to get these kind of returns and the safety. Additionally, it's a passive investment strategy. You can literally put your money in and go to sleep. So what index funds do I suggest? Well, there's a really simple strategy. It's the 3-fund portfolio with an 80-20 split. Now, let me explain that. So a 3-fund portfolio basically says to invest in 3 different index funds, right? There's a domestic total market index fund, an international total market index fund, and a bond total market index fund. And in the same way that an index fund mitigates your risk by spreading its investments across a variety of stocks, you're doing the same thing by investing in several different index funds that cover different markets, right? The domestic, the international, and the bond market. So let me explain the 80-20 real quick. This basically just says you should put 80% of your money into stocks and then 20% of it into bonds. So what I suggest is putting 64% of your money in the domestic or US total market index fund, about 16% in the international total market index fund, and then about 20% in the bonds total market index fund. Over time, an investment strategy like this should net you about 6 to 7% annualized yearly returns while maintaining a degree of safety. So you're not at risk of losing all your money when, I don't know, Yahoo explodes or Bitcoin dies, right? Now that you've got an understanding of how the 3-fund portfolio works with the 80-20 split, I want to show you what an index fund looks like. I personally use Vanguard, and I'm not sponsored by them, so don't worry. But I personally use Vanguard for my Roth IRA. So I'm going to show you what a Vanguard index fund looks like. We're going to start with the Vanguard Total Stock Market Index Fund. And you're going to see immediately that the expense ratio is 0.04%, and that's relatively small. That is not a lot of money. Now, if you're curious how this fund performs, you can always go to their price and performance tab, and you can see that since the inception of this fund, it's returned about 7.41%. The inception was about November 13th, 2000. Now, I mentioned that index funds invest in a variety of different stocks, and you can figure out what that is by going to their portfolio and management tab, and you can see what types of markets they're in, like basic goods, consumer goods, etc., technology, and then you can see their top 10 holdings here. If you're really curious what they're holding, you can go right here to portfolio holdings, and you can see they're holding 3,500 different types of stocks. So keep that in mind. You are invested in a large variety of different stocks. So if one company goes down or up, you're not going to feel it as much, right? So the risk is less. I hope that kind of gets you interested and at least curious to see how these perform, to give you an idea of what to look for when you're trying to figure out which index funds you're trying to put your money in. So, some things to keep in mind. You want to make sure you look at how the fund performs, especially over time. An index fund that opens recently could perform really well, but then perform really badly the next year. You just don't have a lot of history to go off of. But with something like the index fund that I just showed you, it was started since 2000. It's had 20 years of history. So you can really understand that it's continually grown over that time, and it feels more safe. Another thing to keep in mind is those expense ratios. Really understand how much you're paying to be in this fund. And the last thing to keep in mind, especially with Vanguard, is minimum investment amounts. I'm going to bring that page back up over here. But something that I glossed over is this right here. You need a minimum investment of $3,000 even buy into this index fund. And that really sucks, especially with people that don't have a lot of money. But there is an option here. There's something called an exchange trade fund. So this is an index fund that is traded like a stock. It's got practically the same holdings, the same expense. It's practically got the same holdings, the same expense ratio, and the same performance. But your minimum buy-in is now $169 because you trade it like a stock. You buy it like a stock. So there's always an option to invest with less money. And if you go with a different brokerage like Fidelity, I don't think they actually have minimum investment amounts for their equivalent index fund for this. So you should be safe there. So thanks for watching, guys. I really hope you learned something here, and I really want you to start investing, making that money. Make money doing nothing. Thanks for watching, guys. Hope you enjoyed the video. If you did, go ahead and smash that like button. It wants some loving too. If you have any more questions, leave them in the comments below. And if you want more content like that, please subscribe. It would be awesome and it would help me out tremendously. Also, if you're interested in watching some gaming, I stream on twitch.tv/devilmode. Go over there and watch me suck. Thanks.